We hear stories about these billionaires making enormous amounts of money every year while paying very little in taxes, and some of them famously pay nothing at all. So, how do the rich avoid paying taxes? And is there any way we could do that as well? Take Jeff Bezos, for example. We know that he started Amazon and made his wealth by growing the company year after year. But despite being one of the richest people on the planet, Bezos and other billionaires like him are rarely cash rich. They truly believe in making your money work for you. And that's why I have most of their wealth tied up in assets like businesses, stocks, real estate, and so on. Owning all these assets serves them well, as the tax rate on any income derived from them is much lower than your typical salary. The system is made that way because the US wants to promote economic growth by encouraging people to start businesses or invest in stocks and real estate, as all of them can end up creating wealth and jobs, which pumps more money into the economy. But what happens when Jeff wants to buy the most expensive mansion in LA for $165 million? As far as taxes go, he can get the money from two places. The first and simplest option is to sell some of that Amazon stock, which he has owned for decades, and buy the house in cash. Bezos might have some problems with that because selling that many stocks while being the founder of the company tends to create a lot of paperwork. Now, despite the paperwork and headache of the process, the major issue is the taxes. Because Bezos has owned the stocks since Amazon was founded in 1994, he will be paying long-term capital gains tax. The highest rate right now for these taxes is 20%. To make sure he has $165 million left over after paying taxes, he would have to sell stocks worth just over $206 million and pay a massive $41,250,000 to the IRS. So if you were in his situation, what would you do to save tens of millions in taxes? Well, because Bezos has all that juicy Amazon stock, he can easily walk into a bank and borrow against those shares. Here in Canada, we call these investment-secured lines of credit, but different banks might also call them asset-based loans or asset-based lending. The whole point is to get a loan which is as good as cash, but in exchange, not have to sell your assets, which in this case will be Amazon stocks. Bezos now doesn't need $206 million. He can borrow exactly the $165 million he needs and pay for the house using that borrowed money. Much like the personal loans and lines of credit you have, any money you borrow is not subject to tax. But surely there needs to be some downside to all this, right? Well, the only thing which Bezos will have to pay is the interest on the money borrowed. A typical loan like this will be secured on the $165 million worth of Amazon shares, so the interest rate on this will be quite lower than personal loans. It will be closer to a mortgage than a car loan. Let's say he is paying 6% a year on this. It's probably going to be like 3% because he is Bezos, and he can negotiate the rate, but regardless at 6%, it's about $10 million a year in interest alone. That's quite a bit lower than the $41 million tax bill. You might be thinking that the tax bill was a one-time thing, but this $10 million will be an ongoing thing for years. So how does this make sense? Yes, the upfront savings are good, but after the fourth and fifth years, this strategy is more expensive, and that's where things get interesting. Forget 4 or 5 years, let's look 30 years down the road. Let's say Bezos didn't pay a penny on this loan and just let the interest pile up and up every year. After 30 years at 6%, he will owe the banks about $1 billion. But let's not forget that unlike selling the stocks and paying taxes by borrowing against them, he kept the stocks. Over these 30 years, the stocks have seen their normal ups and downs and increased in value. We don't know the future, but assuming that the stock will do roughly what the stock market has been doing for decades, it will give Bezos a 10% ROI every year. For comparison, Amazon stock in the last 27 years has grown on average about 31%, so 10% is conservative. At 10% for 30 years, the $165 million worth of stocks will be worth over $2.8 billion. That alone will make Bezos about $2 billion richer, but that's not the end of it. Remember, he took that money to buy that ridiculously big house. Give or take, houses in America have increased by about 4% every year. Based on that, after 30 years, the $165 million mansion will be worth over $535 million. Now Bezos can decide to sell the house or the appreciated stocks to pay back this loan. Or if he passes away before doing that, then all the money goes into his estate, which will take every step possible to minimize the tax liability. This is a risky game, because if the stocks don't make as much, he would be in the red and take a massive loss instead of the hefty $2.6 billion profit. The wealthy people who do this with a bigger percentage of their wealth are open to higher risk and can easily go bankrupt. But the smart ones like Bezos only do it with a fraction of what they have. $165 million was 1/8 of a percentage of his total wealth at that time, so it makes sense. You might not be buying a $100 million mansion, but you don't need to be Bezos to do this. A lot of these banking products are available to people who have more than $100,000 invested. Every bank has its own rules and every place has its laws, so do your research and talk to a professional. This video is just for fun, to see how the crazy rich people avoid taxes and maybe how we can too. If you enjoyed the video, then please leave a like and don't forget to subscribe. Thanks for watching.